I mean, I kind of refer to it as the ultimate sentiment indicator, Jared, for that reason that you just said. You can take any point on a chart and say who's in control from that very point there. So, for instance, yesterday we saw the CPI report, and you put an anchored volume weighted average price to the beginning of the trading that day. We got hit hard. It rallied up, touched that volume weighted average price midday yesterday, and then dropped hard from it in the NASDAQ. This morning, we saw a rally up right up to the volume weighted average price from yesterday's CPI. And again, we fell away from that. So it tells us factually who's in control from any point in time. The best way that people really can understand what a volume weighted average price is, it's a mouthful, but it's really a dollar cost average. What's the average price the business was transacted at from a certain point? It's not time-based like a traditional moving average, but it is cumulative moving forward from that point, and it accumulates, it averages out from there. So, you invest $1,000 per month in Apple at the beginning of the year. At the end of the year, you've made 12 purchases. Some of them might have, one month you might have purchased 8 shares. Another month you might have purchased 5 shares. But what's your dollar cost average? That's what the government is interested in when you go to when you go to sell it. What did you pay for this? And that's your anchor point. You're anchored to your price. The market is anchored to that key event, be it the CPI or, as you pointed out, earnings reports, important highs and lows, the year-to-date volume weighted average price, month-to-date. I mean, you can go really deep into it like I have, or you can just use it, as a basis of who's in control from the beginning of the year. How does price move around that level? Are buyers defending it, or are sellers coming in getting aggressive as it approaches that level from underneath?